Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's upside challenge continues to battle the 60-day moving average. It's seen around 67.2025, and at present, after the 5-day consecutive moves, we can see here that there is still a challenge being presented. Along with that, with the technicals, we can see that the market is still holding to a somewhat bullish case since rebounding off the 65.9095 area. If we do see a break of this key level of 67.2025, this should reinstate the upside call to around 70 cents as a potential target. Moving on to euro, as widely expected, the ECB raised interest rates by 25 basis points and now holds around 3.75%. As widely expected also, the US Central Bank raised its bench rate mark to its highest level in 16 years as it battles to try and stabilise inflation. The US Federal Reserve interest rate now holds around 5 to 5.25%. The announcement was accompanied by the possibility that interest rate hikes may be near their end after the central bank said previously it anticipates that further rate increases will be necessary, but instead in the statement they said that they are monitoring, which is seen as more or may be appropriate to support a pause in the next meeting. The dollar index, however, was whipsawed as it trades around 100.74 to 101.40 and settled at 101.12 this morning. As we can see here, we've got another engulfing candle, and therefore the market is still holding to a potential bear case for the euro as it struggles to clear that topside level around 110.6075, and while the dollar index still respects the area around 100.50. If we do get a break to the top side, that gives a call to 112, but I do anticipate that the bulls are struggling and therefore could see a pullback to 109. And with the main event now looking to the non-farm payrolls, which expects a lower number from previous of 236,000 jobs added to around 180. This would mean that the dollar could actually tumble further, and that is towards that key level 100.50. Nevertheless, the technicals are weak for the euro, so I do anticipate the top side to fail and therefore see a pullback to 109. It would seem that safe haven across the board from the yen strength and to gold has increased due to the situation of the banking situation in the US. With further jitters coming, the market has rushed to safe haven demand and therefore seen a retreat from 138 area for dollar yen and now looking back to a base somewhere around the 132 to 134. I'm not getting bearish down here. I think this is a good opportunity because overall I still feel there is potential for a return to 138 and with the top side to the broader case of 142. But still the Bank of England's rate hike expected this month. The market is held to a somewhat bullish case and therefore looking up towards the region of 126.5 for sterling, but may find a little bit of difficulty or rocky path as it gets higher as the market is getting a little bit uncertain in terms of this current pattern, therefore could see that profit taking may emerge and eventually see a pullback to 124. When we look at gold, well, the market has accelerated to the upside over the last 2 days. But more importantly, if we look at the monthly time frame, we can see that we're back to a key level, which is around 2068 to 76. With two rejections seen here, the third would put in place and move back to the lows of 1,900. A big call, but nevertheless, it is a key point. And we can see from the previous two attempts, one that took us back towards 1,700, and the second rejection around that 2068 took us down towards the region of 1,600. So we do see a rejection again, then I do feel that it won't be as deep as the previous two, but at least towards 1,900. But that being said, though, if we find that the bulls do overcome that area around 2068.76, then it would put the projection up towards 2,100. But at this stage, I feel unlikely as we are overbought. And the MACD is still somewhat lackluster, therefore should see a pullback along with the long-legged doji. Does merit this call. The downside region seen around 2022 to 26. It is a been in a free fall for oil as the market tumbled from around that 75 to the lows of 64.50. From the rebound, though, it has been somewhat respected and held, but we still need further confirmation to support the bull case. That is a clearance of 69.5, which would give the next target around $72 or maybe even close to about 74. But with geopolitical fears heightening, and along with that, with the market also feel that we may see a somewhat recession in the US, has put a bit of a dampener on gold demand. If we don't clear 69.5, then I feel we will get back to the bottom side of this range again, which is seen around 64, 40, 80, and reassess from there. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.